Now we are joined by the management of Indian Bank. We have Mr. S.L. Jain, who's the MD and CEO at the bank, joining us right now to talk about the numbers gone by in the previous quarter. Very good morning to you, Mr. Jain. Thank you so much for joining us on ET Now. And first, let's talk about the provisions this quarter, as they were down both sequentially as well as on a year-on-year basis. Your NPAs have also improved. If you could tell us what led to such a good performance, is this a one-off, or are you confident that you will be able to sustain the momentum going ahead?
The provisions has come down because our NPA itself has come down. So NPA, which was 0.9 a year ago, is now a 0.43. And you see our slippages are coming down and recoveries are increasing. As a result, provisioning requirement has come down and therefore provision has come down.
Right. So, just to follow up or add on to that, is there any stress that is building up in the book, specifically if you talk about the MSMEs?
So for stress, you have to see the SMA1 and SMA2. You see our SMA1 and SMA2 is coming down continuously quarter after quarter. It is 0.48%. And the collection efficiency has improved from 95% to 96%. So when SMA numbers are coming down, collection efficiency is improving, naturally your slippage will be come down, your stress level has come down. Little bit slippage has come down from the MSME book, which is basically in a micro segment.
All right. Have a very good morning, Mr. Jain. This is Shrishti also joining in. Now, despite the fact that the industry is facing pressure in terms of the cost of funds, you have managed to increase your NIMs for FY24 as well as for the quarter. Now, what is the expectations for FY25 now that the rate cuts are anticipated?
So you see the margin, we have given a guidance of 3.41 last year. With a plus minus 10 to 15 bps. So is against 3.41, we are ended with a 3.54. In the last quarter also, we were at a 3.44. So, and you see, we are living in a tight liquidity conditions. In a tight liquidity condition, what happens? Your cost of deposit will be high. And some repricing impact will come, and in increasing, it is very difficult to maintain CASA around 42%, 42%. Considering all these things, I'm of the hope that our NIM should be between 3.4 to 3.5 in a time to come, with of course with the 10 or 15 bips on both sides.
Right. Mr. Jain, although we've seen the CD ratio at comfortable levels, your CASA has also improved sequentially. Do you see any increase in competition in terms of deposits?
So competition intensity is there, sir. There is no doubt about it, right? But fact remains, your strength of your deposit franchise, energy of people, and you see the bank is continuously able to maintain 42% plus CASA in this tight environment. So the credit goes to entire by 42,000 people. The product we are having, the processes we are having, our endeavor will always be to have a CASA above 40%, and when you have a CASA above 40%, then your cost of deposit will also be under control. You see in the last quarter, our cost of deposit has increased by 2 bips, whereas the yield on advance has increased by 3 bips and the yield on investment has increased by 8 bips, improving better margins. So our all endeavor will be to protect our margins, control our cost, and to have a better yield.
All right. Also, Mr. Jain, on the RBI's draft guidelines of the project under implementation, do you think this will have any impact on your bank as well?
These are basically draft guidelines. The RBI has issued draft guidelines. We will examine these draft guidelines vis-a-vis our position. But as far as Indian Bank is concerned, sir, we are basically a retail bank. 63% of our book is in retail, RAM, retail, agri, and MSME, and 37% is in corporate. And entire corporate is not project finance, right? So it will have a lesser impact as against the others. But we are examining the guidelines, and then we will discuss this internally, and we will submit our comments to the RBI in this regard.
Right. It is believed that the credit cost for PSUs is likely to go up due to the move. What's your take on this?
Credit cost of PSU will go because of the project financing. The PSU banks are doing. But within the PSU also, we are a retail bank, sir. We are not having 50-50 corporate retail or a 55-45. We are 63-37 right now. So impact will always be there, but it will be less, and it will take time, sir. We'll submit our comments to the RBI for this provisioning aspect.
Also, coming back to the financials, Mr. Jain, the CET1 is at the healthy level. Now, deposits are at the healthy levels too. But do you think that you will need to raise capital in FY25?
So you see, we have raised our capital of 4,000 crore in the last financial year, and we are having a capital adequacy of 16.44. This is a comfortable capital adequacy ratios.
All right, with this, Mr. Jain, we'll let you go on that. Thank you so much for joining us today on ET Now and helping with more understanding on the quarter gone by numbers as well as the outlook for FY25.
If you like this video, then like, share and subscribe to ET Now.